Welcome all. This is question number 5, section 2, 2019 Strategic Management Accounting past paper, HNDA. XYZ company considered investing in a machine to produce an item. The price of the machine will be 800,000. The initial investment is 800,000 and its useful life is 5 years. Useful life is 5 years. Year 5. And the machine will be fully depreciated by straight line method. The machine will produce 10,000 items each year. They expected to produce 10,000 units in 5 years. Right. And the price of each item will be 80 rupees in the first year. Our price is 80 in first year. Right. And will increase by 10% per year. It will be increased by 10%. So the 80 into 110%. Take others. How do we get the first year price multiply 110%? How do we get the third year? The second year price into 110%. Likewise, get the value. The production cost per item will be 40 rupees in the first year. Our production cost is 40 rupees in first year. And what they say more, will increase by 15% per year. In second year, how do we get the value? The first year cost into 115%. Likewise, get the other value. Third year, the second year production cost into 115%. Okay, next. The project will have an annual fixed cost of 100,000. Our fixed cost is 100,000. Enter the 100,000. Right. And require an immediate investment of 50,000 in net working capital. The net working capital 50,000. Recover in last year minus 50% from 50,000 and plus 50,000 in year 5. The corporate tax rate for the company is 30. Our tax rate is 30%. And the required rate of return is 12%. Our discount factor is 12%. Right. As a management account of this company, they required calculate the total cash flow from asset for each year, calculate net present value, and give you recommendation with reason regarding the project. Okay, we enter the values. Let's see next. Our depreciation. How do we get the depreciation amount? So our initial investment is 800,000. The 800,000 divided by useful life of assets, it is year 5 years. So our initial investment is 800,000. It is divided by year useful life of assets, it is 5 years. It is 160,000. So we enter the 160,000 for each year. Right. Next we can get the sales revenue. How do we get the sales revenue? The production unit into our price. Production unit into production units, we can get the sales revenue. The first one, price is 80, production unit is 10,000. So 80 into 10,000, it is 800,000. Likewise, calculate the value, and next we can get production cost. How do we get the production cost? The cost per production in year 1, it is 40. 40 into number of production units, we can get the production cost. The first one, our production cost is 40, production unit is how much? 10,000. 40 into 10,000, it is 400,000. Likewise, can get the same process. Next we can get the contribution. How do we get the contribution? The sales revenue minus production cost, we can get the contribution. The first one, 800,000 minus 400,000, it is 400,000. Like same method. Next, profit. Now we know our fixed cost is 100,000 for same. It is same for 5 years. The 400,000 minus 100,000, we can get the profit. It is 300,000 in year 1, and we can get the same process. Now we know our profit, and now we can get taxable profit. How do we get the taxable profit? Our profit minus 160,000, we can get the taxable profit. Our depreciation, profit minus depreciation, we can get the taxable profit. Next, we're going to calculate tax. It is 30%. The taxable profit into 30%, it is in year 1, it is 42,000. Likewise, can get the value. Next, we can get the cash flow. How do we get the cash flow? Our profit minus tax, we can get cash flow. Let's see first one, the 300,000 minus 42,000, it is 258,000 in year 1. Let's calculate this. Now we can get the discount factor, it is 12%. The first one, how do we get the first one? It is year 0, it is discount factor is 1. How do we get the year 1 discount factor for 12%? The 1 divided by 1.12. The same method. The 12 is it 12 VA plus 100, it is 112. It is divided by 100, 1.12. Is it 13%? guys, in year 2, how do we get the year 2 discount factor divided by 1.12, like the same method. Right, now we get the discount factor. Let's see the net cash flow. How do we get the net cash flow? The discount factor into our cash flow. Sorry, it is discounted cash flow. The minus 850,000 into 1, it is 850,000. Likewise, in year 1, 258,000 into 0.893, it is 230,000 and 357.14. Like we calculate others. Right, now we can get the net present value. How do we get the net present value? The sum, the total of this amount, we can get the net present value. What is the net present value? It is 184,067.2. So what they ask next, give your recommendation with reasons regarding the project. The NPV value is positive, so we can select this project because it is positive.